Jones Industrial Average closing at yet another record high yesterday following Senate Republicans passing their tax bill over the weekend. Technology stocks, though, declined, weighing on the S&P 500 and the NASDAQ. Overall, markets closed well off the highs at the close. This morning, we take a look at a mixed open. As you see there, Dow Industrials up this morning, but the NASDAQ and S&P lower. Joining us right now, Morgan Creek Capital Management CEO and Chief Investment Officer, Mark Yusko. Mark, good to see you.
Thanks for having me on.
Thanks so much for joining us. You've been such a great, astute investor in terms of technology. Want to get your take there, but also the broad markets. You still own tech, though, right?
Oh, lots of tech. Yeah. And, you know, taking a little bit of profits. It's been a great year for technology stocks. You know, the FANG stocks are up a lot. But what's interesting is people don't talk about it as much as the BATS stocks are up a lot more. Alibaba, Tencent, Samsung up much more than the U.S. stocks. So you have to look around the world at technology as well.
So are you going Europe, Asia? Where's the biggest?
There's more good tech in Asia than Europe. There's a little bit in Europe, not as much. But lots of great opportunities in emerging markets in particular.
So would you be a buyer of tech now on this pullback? Do you think the pullback has further to go into the end of the year? We still have a few weeks left.
Yeah, I think timing-wise, there's a little bit of buy the rumor, sell the news around the tax plan. I think there's a little bit of tax loss selling for year-end. People have made a lot of money. So usually you get a little bit of January effect. People sell in December, buy back 30 days later and later in January.
What about China? They stealing everybody's intellectual property and taking their technology with it. But now there's so much into it themselves. I mean, they're applying for more patents on a per capita basis than any country in the world, and they seem to be significantly invested in innovation and technology.
It's a great point. 20 years ago, it was very clear, right? All of Cisco's technology went to China, and it became Huawei. Now, Huawei is the biggest technology company in the world, still private. But today, to your point, they're setting special economic zones, spending a lot of money. They'll spend over $1 trillion on innovation and technology over the next couple of years. So they are very serious about true innovation, a really, really important point.
In terms of intellectual property, I'll pivot back to the tax reform bill that was passed in the Senate. But one of the Senate problems that the companies are pushing back on is the Senate bill does not repeal the corporate alternative minimum tax, which would essentially eradicate potentially research and development incentive that technology companies use, but it also undercuts an incentive that's in the bill to keep intellectual property here in the United States. How much are you watching what's coming out of Washington when you make these
well, you have to watch it a lot. Now, I'm actually not a big fan of what happened last week in the tax plan.
Why? What? You mean
we don't have enough time this morning to go.
No.
Yeah, I just think there's a lot of problems with. We're late cycle economically. This is not a time to be doing tax cuts. This is a time to be pushing innovation and R&D spending and things that get towards investment. And the problem is the place where the tax cuts are going to happen at the high end, at the wealthiest individuals, they don't have a high propensity to consume. It's the lowest end of the consumer that's actually going to spend money into the economy. So, but generally speaking, focusing on innovation and wealth creation. I mean, I come all the way back to, I just don't think you should tax income at all, right? I think you should tax consumption, because why would we want to disincent creation of wealth, right?
So as an investor, if this AMT tax does remain in the final plan, what do you do?
Well, I think in the short run, you've got to think about, as I said, weightings and things like technology that'll be affected. And you see the market reacts very quickly, right? I mean, we're talking 3, 4, 5% moves literally overnight in some cases. So you have to anticipate change and be prepared for readjusting your portfolio pretty quickly.
Well, you know, one of the real big important parts of this tax plan is the corporate cut. So 20% corporate rate, perhaps 25% pass-through or even lower on pass-through. Do you not believe that that is going to be fuel for an economy, whereas corporations will get a better tax treatment and they will respond by investing in their businesses and hiring new workers? Are you not expecting that?
Actually, no. I mean, I don't expect it, because a couple things. One, most companies don't pay the higher rate today. They pay a much lower rate. And the second problem...
But this is still going to be lower than what they were paying on an effective way.
There's certainly some companies that will have a tax decrease. But what shows historically in the current environment, and it's because of incentives, you know, the Tax Act in the late 80s changed the ability of companies to use options-based compensation as an expense. So they're incented to buy back stock as opposed to invest in R&D and infrastructure. Right. So history has shown over the last couple decades that companies have a higher propensity to buy back stock than invest.
I'll just push back on one quick thing, because it's the high earners in progressive states that really get stuck with a lot of this bill by repealing the state and local tax deduction. The plan in the Senate is to keep in the individual AMT, and also Stephanie Pomboy has been on this very program saying that you actually need to cut those people's taxes because they're the ones who spend. They're the ones who make up the vast majority of spending, and so you don't. So she doesn't like some of what's on the individual side, because basically the people who earn the most and spend the most aren't getting any tax cut. In fact, they're getting a tax increase.
We just disagree on that. That's okay.
Okay.
She said, Stephanie Tomboy said that the highest earners spend 60% more or something than the low 50%, than the bottom 50%.
Right.
Oh, there's no question they spend more.
Yeah.
It's the marginal propensity to consume. Right? If you're spending most of your money on food and shelter and you get a tax cut, you're actually going to spend on some discretionary items. If you're already going on 5 trips and have 3 cars, you're probably not going to buy another car. So it's just a marginal propensity.
What about the money overseas? Most companies I've had an association with this last decade, every single one of them has made major capital investments overseas doing business there. You don't think some of that's going to come home as a result of this tax bill?
Well, I think, as you pointed out earlier, I think we've incented to maybe accelerate that process by, having tax incentive. To your point, they're trying to avoid paying tax. Tax avoidance is good. Tax evasion is bad. So you go up to the opportunity set that you have, and if it makes sense to have a facility in Ireland because you pay less taxes, you're going to do that. I don't see this bill as it's currently formed changing that very much.
Would you be inclined to sell once this is all said and done and final?
Look,
sell in the U.S.
And we talked about this last time I was here. The markets are highly valued. Right? Some would say overvalued. And it doesn't mean they can't get more overvalued, but I think it's a time for caution in U.S. equities. I think there's lots of places around the world where there's really cheap stocks. Korea, I was just in South Korea a few weeks ago. Really, really cheap stocks, the cheapest developed market on the planet, selling it below 10 times earnings. So really cheap stuff there. There's other cheap assets in other parts of Asia. China, A shares in particular, quite interesting, although they've suffered in the last couple weeks. But I like to buy what's on sale, and I just think things in the U.S. are more expensive than they are outside the U.S.
Yeah, because this is the first time we've got synchronized global growth going on.
Right, in a decade.
Yes.
In a decade.
All 45 developed nations are growing simultaneously this year.
Yeah, it is really amazing.
It is. Mark, it's good to see you.
No, great to have you.
Thank you so much for joining us. Mark Yusko there.